Imagine waking up to find that your health insurance costs are skyrocketing, putting essential medical care further out of reach for you and your family. It's a reality that's gripping millions. But what if I told you there's a hidden lifeline for some lucky workers? Dive into this eye-opening exploration of rising healthcare expenses and the unexpected ways employers are stepping up, because not everyone is left scrambling to pay the bill. As part of NPR's compelling series, Cost of Living, The Price We Pay, we're diving deep into the relentless wave of inflation that's reshaping our daily lives. This installment focuses on healthcare, one of the most personal and critical areas affected. We're shining a light on what's fueling these hikes and how folks are adapting. If you felt the pinch of higher prices, we'd love to hear your story. Fill out this quick form to share with NPR and help paint a fuller picture of the struggle. Let's break it down. Healthcare in the U.S. stands out as the priciest in the developed world, and unfortunately, things are only getting tougher. Before we get into the weeds, it's helpful to understand that health insurance premiums are the regular fees you pay to keep your coverage active. For a typical family of four enrolled in an employer-sponsored plan, the average yearly premium hit over $25,500 last year, based on data from the esteemed health policy group, KFF. Out of that total, employers typically foot about $19,200, while workers shoulder around $6,300. Since 2019, these premiums have jumped by more than 24%, and experts predict even steeper climbs ahead. Picture a family budget where this chunk of money keeps growing. It's no wonder it's causing widespread anxiety. But here's where it gets controversial. What's really behind this relentless upward spiral? Largely, it's the influence of for-profit players in the health sector, such as pharmaceutical companies, pharmacy benefit managers, hospitals, and insurers. They're all contributing to the ballooning costs of getting care. For instance, drug makers are innovating powerful new treatments like those GLP-1 medications for weight loss or advanced cancer therapies, which is fantastic for patients, but they're pricing them at eye-watering levels. On top of that, post-pandemic, more people are seeking medical help after avoiding it during lockdowns, ramping up demand and, consequently, prices. And don't forget the wave of mergers and consolidations among insurers and other health businesses. These deals have reduced competition, giving the surviving companies more leeway to hike their fees. Think of it like this. When fewer options exist, the remaining ones can charge what they want, squeezing everyone involved. And this is the part most people miss, an intriguing twist that's offering relief to a select group of American workers. About 154 million people in the U.S. rely on employer-provided health insurance, and many face paycheck deductions that could swell by 6% to 7% on average next year, according to benefits experts at Mercer. Employers have limited sway over the overall costs set by insurers, but they do decide how much of the burden to pass along to their staff. Across the nation, a growing number of companies, both large and small, have chosen to absorb the full premium costs, sparing their employees from any upfront payments. This isn't just a perk. It's a strategic move that's sparking debates about fairness and corporate responsibility. Take Boston Consulting Group, BCG, a global powerhouse with around 10,000 U.S. employees. They fully cover insurance premiums for their staff and families, ensuring zero deductions from paychecks. Our people are the heart of what we do, explains Alicia Pittman, BCG's Chief People Officer. Having healthy employees leads to a more productive team and a workplace everyone looks forward to joining. With premiums covering about 20,000 people total, it's a hefty commitment, though Pittman keeps the exact figures under wraps. But as she and other leaders shared with NPR, the returns are worth it, attracting top talent, cutting down on turnover, and letting workers concentrate on their roles without the distraction of healthcare hassles and expenses. This trend isn't confined to big corporations. According to Mercer, roughly 12% of large employers provide at least one zero-premium plan for individual workers, though only 2% extend that to dependents. Smaller outfits, nonprofits, and even startups are jumping on board too, as NPR's recent conversations with executives and team members reveal. Healthcare is non-negotiable for us, says Oliver Carras, CEO of ZocDoc, the app that simplifies booking doctor visits. ZocDoc offers multiple plans, and while their zero premium option comes with a heftier deductible, the company contributes to health savings accounts to ease the load. Carras acknowledges it's an escalating cost, but insists it's part of keeping the business robust. It's on us to ensure we're sustainable enough to handle it. Then there's Ryan Close, founder and CEO of Bartesian, a Chicago-based startup that sells at-home cocktail machines and pods. Think a Keurig for drinks. After relocating from Canada in 2019, Close was shocked by the U.S. system's costs when his family needed a prescription. It was a real eye-opener. This stuff isn't cheap, he recalls. Bartesian, buoyed by a $40 million investment windfall, including backers like the Chicago Cubs chairman and a major liquor company, now covers full premiums for medical, dental, and vision for its 30 employees and families, plus $1,000 yearly into flexible spending accounts. Sure, it's a trade-off. Bartesian skips formal parental leave, but Close sees it as a magnet for talent and a statement of values. We're showing we care about our team's well-being, including their loved ones, he says. And his motivation? A nod to his Canadian roots, where universal healthcare meant no out-of-pocket premiums, a stark contrast that fuels his commitment. So, is this the wave of the future, or just a privilege for the few? Critics might argue that only well-funded companies can afford such generosity, potentially widening the gap between haves and have-nots. Others might wonder if employers should mandate this for all, or if it unfairly burdens businesses during tough times. What do you think? Does offering zero-premium health insurance make a company more ethical and appealing? Or is it an unrealistic expectation in our profit-driven economy? Share your thoughts in the comments. I'd love to hear your take on whether this could inspire broader change or if it's just another layer of inequality. Let's keep the conversation going.